I'm glad I got that out of the way now.
Okay. Yes. I am so happy it's Friday and it's Financial Friday. And I love chatting with you, Mr. Ron Bennett. And you are my very first real estate agent or real estate mortgage banker that I ever known. And so to think that we're going to be doing this twice a month for people who really, really want to know how to buy a house. Like I am so grateful to you. I am absolutely not worthy, but am so worthy because I am so worth that. And I'm just happy to be here with you.
Well, I'm glad that you have included me in your Financial Fridays.
Yes, I mean, or did you include me? I'm not sure who was.
Well, no, you included me, so
Okay,
we're okay.
okay. Well, you are definitely Dan's pick, and he used to have Fridays off from Delta Airlines, but now he's not. So I don't know. That's why I say I kind of feel like I was just lucked into this, and I belong here, and I'm gonna walk in my greatness. But I want to. My purpose here is to make sure that every Friday we can have. Authentic opportunity for people to put stuff in their chat or ask us questions or be able to reach out to you. They can apply for a loan. You can get them back to me or whoever their mortgage partner is with you that's selling real estate. You know, of course, the Bundys, we're always glad. We offer 40 years of experience combined.
Well, if they're coming from the Bundys, they will go back to the Bundys.
I appreciate that. But I also want other, my real estate brothers and sisters, my broker sisters and brothers, our cohorts. I want them to know that they can be safe with you, Ron. You've always provided good information and you've always done just that. You are a stand-up kind of dude. You make things happen and they come back to us, you
Well,
know?
I appreciate that. I really
Yeah,
do.
we appreciate you. So let's just like set the tone here. I understand. I have my marching orders from Mr. Bundy himself. Let's set the tone here. We are going to talk about one subject. How much a month are we going to do this? Once a month or every other Friday? What kind of time do you have?
Well, at the moment, I have every other Friday available,
Okay.
and we can talk about just about anything you need to talk about as far as financing, as far as getting approved, as far as whatever you feel is necessary. And if you get questions from your clients that need to be answered, I you know, if I don't know, I know how to go look.
Right on. Well, I want to start by having just a general conversation with you on this Financial Friday. And I want to ask you about a very popular and trending topic. And that is, if you don't mind me pulling out something out of my hat here, let's talk about buy downs. It's a very deep rooted conversation. I am seeing that in a ton of listings. Buy downs available. We'll offer 3% buy downs with a full price offer. Well, seller to pay 20,000 towards buy downs. What in the ham fat does that mean, Mr. Bennett?
Well, basically, what a buy down is buying it down from the original rate that you have. There's not a whole lot we can do right now with the rates that are out there. I mean, the payments that are out there right now, I should say. So we're under a situation where we can do either a temporary buy down or a permanent buy down, and I'll explain each one of them. So
Please.
with a temporary buy down, we're buying it down for a certain period of time. In other words, for most of the buy downs that I'm seeing are what we call 2-1 buy downs. In other words, we buy it down for 2 years, and then it increases in 1 year, and then after that 1 year, it increases back to the regular payment that you've had. Um, on
Stop.
the
Stop, because I want to ask you a question about that little tiny piece.
Okay.
So I'm not asking you to go look for information unless you have it off the top of your head. But if I were writing an offer today and it was the interest rate I saw online was 7%,
Yep.
okay,
Hmm.
and what would and the seller is going to pay some closing concessions. They're going to pay some closing costs, or we can use it for a temporary buy down. Okay, 2-1, because you just said it.
Right.
Okay,
Right.
have 7%. What does that mean? What does that mean for my monthly payment?
Okay. It means that depending on the amount that we are paying towards the buy down. So let's just take a normal case. If you have a rate of 7%, we're going to buy the rate down to 5%,
Nice.
and it'll stay at 5% for 1 year.
Okay.
Then then in the next year, it'll go up to 6%,
Okay. So my payment's going to increase.
and your payment's going to increase.
Okay. Are
And
you
after,
taking that into consideration when you get Mr. Bundy and I qualified? So today we're buying.
no, you have to qualify at the 7% rate.
Mm, okay.
Okay, you have to qualify at the 7% rate. However, once we get you qualified and once you're in contract and we get ready to sign, we can go ahead and buy it down. Or I should say the seller can assist you on a temporary buy down to buy it down to the 2%.
So the 5%. So
Yeah.
so today, if I bought a house, eh, uh, which would not be out of character for us, today, if we bought a house or if we sold a house and the interest rate was 7%,
Yeah.
and you offered that 2% buy down. Today, if we were closing Monday, per se, which of course it doesn't happen that fast in TV land, just so you guys know, but we could have the 7% down to 5%. So our payment would be reasonable, right? Our payment would
Yeah.
be something
Your
that's
your your
affordable.
payment would be 5%. And I see a question, is that like a balloon payment? And no, it has nothing to do with a balloon. It's still a fixed rate 30-year mortgage,
Mhm.
amortized over 30 years,
Oh, sweet.
and you're just making the payments as you go along. The part that everybody needs to understand is that you've already paid for the interest that you would have paid at 7% by buying it down.
So, like if that costs, for instance, I'm just throwing this out for easy math. So, if the buy down and our payment, what we were buying down, cost us 2,000 a month, 2 times 12 is 24. Easy math.
No,
No, not
no,
like that.
no, no,
That's
no.
not right.
Why don't we take, without giving out names, why don't we take an actual loan
Yeah,
that we did for you?
right. You did that
Okay.
for us. Yay! That was
So
a good one. Okay.
so the seller decided he was going to pay $20,000 towards closing costs
Yes.
and anything else. Okay.
Right.
We had we had X amount of dollars left over
Yes.
after he paid all the closing costs.
Yes, I
So
remember.
we took the residual amount of what he was going to use for closing costs, and we bought the rate down to a certain amount.
Yes. Sweet.
Yeah. So
And that was
so
awesome because then they have that period of time. I don't know, a year or 2 years. I don't remember
they
because
have 2 years.
yeah, they had 2 years to kind of save some money and put some stuff aside. And we know as professionals that these are our forever homes, but they're not our forever loans. And they get to have a kind of a reprieve or a cheater rate, a cheater payment for a couple of years
Yeah.
until
Well,
they get
the
straight
good the
down.
the good thing is, we're watching interest rates go back down. and it looks as if we're starting to get a little bit control of inflation. So
Mm.
as we get control of inflation, you're going to see the rates come down, and that's the reason that uh, uh, companies are looking at what they need to do. Because as soon as the rates come down, I'm going to be busy doing a lot of refinancing.
Lots of refis. Yes, we love that word. I'm scared to get a refi. Ron, are you seeing other fraidy cats like Angelina Bundy? Are you
No,
seeing people being afraid?
it depends. It depends on what you're looking to do. Most of the refis that I'm doing at this particular time are people that are pulling equity out of their homes or cash out refinances.
Why do people do that? I'm just curious.
Well, they pull it out to pay off debt, pay off credit cards. They do it to. I just finished one where the the borrower is doing a renovation on their home,
Mm,
and they bought a investment property,
nice.
and they got
Yeah.
to pay for that and those types of things. So yeah,
I like that. I like that. And I didn't know uh, because, we don't always get to work together, but what I appreciate about you is that you're always available. You make yourself available. You have so many cool tools. I love your app by phone. I love
yep,
just cutting and pasting and sending that old app, and I appreciate it that you're always willing to meet us. You come out to our open houses. So I love it when agents can hook up with their favorite mortgage banker, and the mortgage banker is actually willing to do some work,
yeah,
and you're willing to come to our listings, our open houses for our listings, but even you've hosted with us at other agents that we are just fond of,
yeah,
different branches, brokers, different people all together. Just, hey, they got a cool listing. I'd love
yep,
to sit that to meet new buyers, and you're on site,
yep,
large and in charge. People can't tell that we're giants because we're sitting down on this screen. Okay. But we are big people. And
yep,
so we come and we have a presence. But more than anything, I like that you have these tools in your tool belt. Ron Bennett, it's super helpful. Now, you said something about another buy down. Do we have
yeah.
time for you to explain the other
Oh,
buy down?
sure, sure. The other buy down is a permanent buy down. In other words, we're going to permanently buy the rate down.
Mm-hmm.
So we're going to look at the rate sheet. We're going to see what rate works for you,
Mm-hmm.
and we will pay whatever the fees are or the discount points
Mm-hmm.
for that particular rate. And then it's permanent with what you're doing. So you don't have to worry about it raising every other year or something like that.
That's nice.
Yeah.
That's nice too. So
And
those would be for our people that are our buyers that are in a position where they need stability in their life. They need to be able to get some sleep and know, okay, my rate is going to be 6.25, but I can live with that
yeah.
because this is
And
permanent, right?
the good thing about the permanent buy down is the seller can pay for it or the buyer can pay for it.
Mhm.
So,
Are
if
those?
if they've got extra money to put
Mhm.
towards this, or if you've got a seller that again is paying a lot of money towards closing costs and we've got some money left over, we can buy down the rate and make it a permanent buy down.
Ron, that is good stuff because Mr. Bundy is conservative. I hope that he is not offended by me telling his tea. Okay. Sip, sip,
Yeah.
sip. He's
Yep.
conservative. He likes to know, he comes from a place of paying his bills on time. He's structured. He wants to know this is wife. This is where our budget is.
Yeah.
And don't you go over this budget. We don't know. Tomorrow's not promised. This is what we can afford.
Yeah.
Me, on the other hand, I am a little more risque. All right.
Yeah.
I like
Yeah.
the thought of, babe, let's take this 2-year buy down. Okay.
Yeah.
And it'll go
Yeah.
up a year from now, but let's squirrel away something so we can support that. And then let's go ahead and get this rate over here. I like the thought of that, Ron Bennett.
Um, Question, what's the difference between just adding money as a down payment versus a buy down?
That's a good question.
Yeah, that's a very good question. The money you're putting for the down payment reduces the amount of what you're going to be paying back over the period of time. The buy down is basically taking the rate and moving it to a different rate other than what we're starting out at.
What the rate is
So
today
yeah,
for
so
everybody.
so most so let's just say that we're doing a conventional loan for you. You've decided you're going to put 10% down. So your your loan amount is going to be 10% of whatever your purchase price is.
Mm-hmm.
The the buy down reduces the rate itself down to a lower interest rate.
And that's
Yeah.
the key there. That for the question, the key is that people are freaking themselves out and they're not buying real estate because they're afraid to pay 7% or 6.5%. They're like, oh, forget it, I'll just rent.
Well,
Because
here's your problem with that. Those people who want to sit on the fence
yes,
are going to miss out in a couple of ways. Number one, when they get to 2 years down the road and they're still renting, they don't get the portion of the equity that they would have had in the house available to them. Number two, if they're going to wait until rates go back down, they're going to be in the same situation that they were in before. Understand, it's low inventory out there. You know that. There's nothing out there. And then when you do find something with the rates being down again, you've got going back to bidding wars.
we're seeing that now, Ron. We are seeing bidding wars right now. Okay. The most of the times when the sellers will offer some closing costs or some concessions, make no beefs about it. Their house is priced a little higher. It's sat on the market a little longer. And people are saying it's a buyer's market. No, it's not a buyer's market, boo. It couldn't be a buyer's market. Okay.
Well,
Because
there's no inventory out there. How
right.
can it be a buyer's
It
market?
is a seller's market. I want you people out there, you agents that are giving false hoods, you serving more propaganda juice than Tropicana. Okay, you're running around here talking about you're an expert, and you're telling people it's a buyer's market. It is not a buyer's market. It is a seller's market. There's only 30 houses on the market under $650,000, which is the average. Okay, now it might not be the average price that we're selling right now because we have some $1 million inventory. Okay, and that's still a pretty reasonable priced house. But let's face it, a 2-parent household for an average income under 600, say under 150,000 a year. If you're under 150,000, sweetie, you're and you have a car or any kind of credit or anything like that going on, you're probably looking at a house between 500 and 700,000, probably.
Yeah.
And this buy down, these seller concessions from a well-written expert broker, coupled with a mortgage banker who understands these sorts of tools. Okay, because all mortgage bankers are not considered equal. I work with some really good ones. And Ron Bennett, you are available and you make it happen. And you have these buy down tools. So I thank you for, coming off the muscle.
Yep.
having that with
One,
years of experience. The
yeah.
buy down is essential.
Yep. One more thing I should tell you about buy downs.
Tell me.
We were just told by the Washington State Housing Finance Commission
Yes.
that they will now do buy downs.
Is today my birthday? Did somebody forget to tell me today was my birthday? I have 17 buyers that say, I don't want to live in this county. I don't want to live past this county. I don't want to drive more than an hour to work. Okay. I'm waiting on light rail. All right. To get to my neighborhood. And with that being said, that changes the game.
Yes, it does.
That changes the game, because I wanted to ask you that, but I don't want to turn off a person. Dan and I bought our house. We bought our house as first-time buyers, newlyweds. We're pushing on 7 years now, but we bought first-time buyers. We bought our house at 450. Love to be transparent out there. There's no shame in our game. We were in 4 or 5 bidding wars, okay, because we were trying to buy above at the top end of our range, okay? And we were scared to ask for anything, okay? Now, the house 3 doors away, this is just 2 short years ago, 3 doors to our south, just sold for $230,000 higher.
Wow.
It's actually only a walk-in closet bigger than ours. So it's like 50 square feet larger than our house. Okay.
But that's additional equity. That's additional equity you have in your house now.
Totally. We're not going to sell our little house on the lake. You guys probably can't see our little lake. It's not our lake, but we call it Bundy, the Bundy Lake.
I've seen it. It's a nice little lake.
It's a nice little lake. And we have, technically waterfront property. I don't think that we can. Probably is only 9 feet in the middle, but anyway, the point is Ron, a buy down would have been insane, and now we want to buy on a bigger lake or on the Sound, and the interest rates are high, so we're afraid, and that's why I want to selfishly ask buy down, talk with you. I want to chop up that buy down because it's putting us in a whole different mindset. Now we can buy on a bigger, better lake. If that's your thing, that's our thing.
You qualify at what the rate is, and we're looking at rates being a little bit more competitive out there, and we're looking for the best rate we can get for our folks at the moment, and then couple that with the buy down, couple that with getting the seller to pay some concessions and temporarily buy it down, or if you've got a little bit more money, you can permanently buy it down. So it's out there.
We love it. We love it. And I hope everybody that sees this is not afraid to reach out to my guy, Big Ron Bennett, and share that information. Excuse me. Do you text, Ron? Well, I know you text because I text you all the time and ask you quick questions.
I text all the time. If anybody wants to text me about anything, have them text me at 253-561-9704.
And while I don't like to text because I won't text and drive people, but send me a text anyway because I'll talk text with you. Okay. And my phone number is 206-900-2170. And I am never, ever too busy to answer a text. If you already have a mortgage banker and you already have a killer broker that sells real estate, no harm, no foul. But at least let me help you. Let me help you not be a renter anymore. Okay.
If you have a question, or if you are concerned about something that you didn't hear, feel free to give me a call.
Yeah, absolutely. And then you know what? They could also email you, and they can email me.
Yep.
What's your email?
They can email me at ron.bennett Bennett at apmortgage.com.
So that's short and simple. I'm so accustomed to just sending the app, or just emailing you, push, reply. I just have a super long thread between you and I.
Yep.
We're at Sold By, and you can always tell someone that's worked underneath Dan and Angelina, or that we brought into the industry. We're at soldbyournames@gmail.com. So soldbyangelina@gmail.com, but you can reach me also at soldbydanlbundy@gmail.com. And you can always go to our websites. I would love to see you guys. I would love to share a tour with you or help you list your property. And the good news is, this is a secret. I don't want all real estate brokers to be unavailable to this information, but Ron will give you positive feedback on what happens after you sell your house. He will give you some numbers to help your buyers come in and be their preferred lender for you, to keep everybody on the same page and in the loop. Ron, I was so grateful to you on our client who actually is in the industry. So it was an honor for both of us, to have a vet that we served, meaning a veteran to the industry who knew how to do their own stuff, but they trusted you and they trusted me and Dan and I to get their property done. And they have a killer rate, stellar. And I mean,
With a buy down.
With a buy down. And so they qualified for this big gigantor house, but the buy down was essential. And that's where your agent comes in to negotiate those concessions. And I mean, you just can't, who gets their Barbie dream house the first time out? And then they have this buy down. I don't remember now if it was temporary or permanent, but it doesn't matter, because the point is that now everyone can have it. It's not just for the experts. Okay, we can all have it. I don't know about lending. I lent for some years, but that wasn't my niche. My expertise lies in the real estate market. I love to write contracts that win. I love to write listings that are going to get you the house that you want and get you onto your next journey. We love that. That's what we do. We specialize in that. We don't try to do everything. We stick to burgers and fries like McDonald's, And so I would love them to reach out to you. You are an expert. You're my first broker. People don't know that about you.
Long time ago.
Long time ago. Gerald is 27 this year, and he was in my belly when I met you. So I've known you for 27 years. And my late uncle, Roosevelt Hubbard, said, go to my guy, Ron Bennett. And we came on to Ron Bennett. And, I always tell this story. I'm going to tell it again a million times. Okay. I always say the highlight of meeting you in your office was when you looked up our credit, examined our credentials and our bank statements and check stubs and all that kind of good stuff. And then you said, dropped the pen and said, what name do you want to, how do you want your name on title? We knew we were in business, Ron. We knew we were in business. That was before I sold real estate. That was when I still cut hair.
Yeah.
Okay?
Yeah.
So many moons ago, my friend, but I appreciate you. Is there anything else you can tell us about buy downs? I don't want to go into anything else.
There's you can do it just about on any kind of loan you want, conventional, FHA, USDA, and
where are your USDA loans at? Like, what do they have to be? I see that all the time.
USDA loans are rural loans. There's some spots up in up north in Snohomish County. There's a I don't know exactly where, but there's some spots in Pierce County, and there may be some down towards Olympia.
Oh, nice. Well, we work with folks down there, and up there. We have some Snohomish County listings that we recently closed. lot of land on those houses. You know, sometimes they're 15 acres or 5 acres, because it's really handsome to want to grow your food and stuff now. You know, I can't
Yeah.
imagine growing my food. I can't even get the cactus to grow in the house. You know, but you know that USDA loan is one of my favorite loans. It's just been some years since I've had the pleasure of serving that up on a platter in a real estate transaction. But I sure would appreciate it if you tell our friends about that, Ron. But let's talk about the buy downs, guys. Get your agent, call me. I'm glad to be your agent. You know, Mr. Bundy and I come as a team. And so I would love to write an offer. And the good thing about Ron Bennett, I can't say enough good things about you, Ron, but the good thing about you is when I text you and say, Ron, can you get buyer a letter? Good googly woo. I have had you come and tell me, you text me back and said, I'm sending it to your email. I can meet you if you want the ink on it. Ron, you're the guy. You're the man. You, boom, boom, boom. So thank you for sharing buy downs. That was pretty simple.
Yep. Yep. And again, if anybody has any questions, I saw my phone number and my email address go across. And if anybody would like to look at my website, it's ronbloans.com.
Yep. Oh, don't you love it when you have someone like a Twanda Hill Incorporated streaming you? We don't have to worry about that. That's just what we do. And
Yep.
you know, it's just nice to be able to serve the public and serve buyers and sellers so they can move on with their journeys, right? Being
Yep.
a part of that, is that fabulous? Like we have the best jobs in the world. I don't know.
I like it. I've been in for a while, and I'll be
How long
here
have you
until
been in?
35 years.
Jeez, you must have only been 1 years old when you.
No, no.
Ron, you look fabulous.
Thank you.
I'm gonna be
Thank you.
60 this year, and I just celebrated 21 years in the real estate industry, so I'm pretty
Yep.
excited about that.
I've been in for a while.
Yep, we know our thing. So, you guys out there that are watching this, you're picking it up later. I am Angelina Bundy. I have a fabulous guru husband that's been in the industry almost 25 years. Daniel Bundy Real Estate Group. We set up on that co-founders network at EXP. If you're an agent and you're looking for a good mortgage partner, my guy Ron is always available. He will make himself available and get back with you when he says he's going to. So I kind of like that about him. It's pretty special. And he shared with you today our nugget, which is the buy down. The 2-1 buy down is a sweet option. But if you need a little more stability in your life and you want to just a little bit of a buy down to get your payment nice and tight for a 30-year long haul. And Ron, you're always cool about giving other strategic opportunities for purchases. And again, just remember, just because you find your forever home does not have to be the forever loan. You know, he can do a refinance. He's going to be reaching out to you, telling you, hey guys, it's time to do something else. You know, call those Bundys up and get an investment piece of property, you know, or buy up or buy down because you did it at that time. Let's do it again. You know, this is not the end all to beat all, guys. Thank you for having us together and spending some time. I look so forward to you putting me back on your schedule in 2 Fridays, right? Well,
Yep.
we're going to skip a Friday and we're going to be back here again for another Financial Friday. Yes?
Yes.
All right. That's all I got. I just wanted to talk about buy downs. I wanted to tell you about my dreams. Okay. Bye, everyone. Have a good weekend.